Hello everyone. I hope I'm audible to everyone. Can quickly someone confirm?
Yes, Rakesh.
Yes.
Okay, good. Hi, good morning, good afternoon, and good evening, depending upon from wherever you're joining in. So my name is Rakesh Garge. I'm fast track recognized solution architect for FNO, certified trader and group leader and member of India Dynamics 365 Power Community User Group. Once again, thank you very much for joining us today. As of today morning, we had 18 plus registration for this our day three session. So this is the third session in the series where we are going to talk about more on the financial aspect, which is connecting a dot with purchase and sales activity. I'll be joined by Rupesh today. Yeah, hi Rupesh. Would you like to introduce yourself?
Yeah, hello, Rakesh. Hello, everyone. So, my name is Rupesh Damdere. I am a lead finance consultant working in the Tata Consultancy Services. I have 13 plus of experience in Dynamics and ERP implementation, and I'm worked on different industries and different domains in terms of ERP implementation. That's it. That's it from my side. Thank you.
Thanks, Rupesh. So quickly move on to our next slide. But before that, I'll just bit of a housekeeping as we always do in every session. If you have any questions, just please do and try and ask the questions through Q&A chat. If you want to speak to our speaker, just think in the will try to enable the video as well as the mic both. And towards the end, we will have some 10-15 minutes time where we will talk about if there are any further questions. So in terms of agenda today, just do a quick recap, maybe next 1 or 2 minutes or so. So last two sessions, we started this journey of Dynamics 365 Finance. We talk about what is accounting. There we try to learn more on the accounting terminology in FNO. We also talked about accounting process, some of the building blocks for the accounting, which is asset, liabilities, revenues, expenses. Then in the subsequent session, which is day two, we had a deep dive more on the list of use cases where we talk about the golden rules of accounting principles, as well as we also talk about the concepts of main accounts, chart of accounts, then account structures, and then a couple of use cases we saw where Anil helped us to understand how those account structures can be correlate financial dimensions, so on and so forth. In today's session, Rupesh is going to help us with the same theme of list of use cases. However, it will be deep dive more onto the financial aspects of purchase and sales ledger. I think everybody is aware of how this purchase and sales process works at a very high level. Some of you might be currently working in the implementations, maybe familiar with the process, how it works in the FNO in terms of purchase, sales, and from where it start. However, the ledger integration aspects, how that sub-ledger comes into picture, what are the configurations and the options that product allows, that is Dynamics 365 Finance. And if at all, if you want to learn more on that, Rupesh will help us to understand. So with that, I'll take a pause here and I will request Rupesh to share his screen, walk us through the next 45 minutes or so in these aspects of FNO and as well as the purchase and sales ledgers integrations. Rupesh, over to you.
Yeah, thank you, Rakesh. So, I'm sharing my screen. Afternoon, good evening, everyone, wherever you're from in the geography. So, as Rakesh provided that recap of day one and day two sessions, which we had in earlier sessions. So, the today's agenda is to talk about more about the purchase and sales process flow, the integration, ledger integration between sub ledgers related to purchase and sales process flow. We'll also going to touch base the product, trade agreement, and charges related to purchase and sales process. And then we'll see how this different set of configurations will play the role at the time of invoicing of purchase orders and sales orders. So as mentioned by Rakesh, we'll take the same theme where we'll discuss about the setup, and then we'll see the transactions or use cases based on those setup. So, so I will move forward to the next set, where we will discuss about the basic concept related to purchase and sales flow. So everyone knows about this purchase flow, how the purchase flow works. So, so take the example of this pizza manufacturing company. So how the purchase flow will come into a picture for this pizza manufacturing company. So let's say if someone from the store wanted to buy some material as a part of this manufacturing process. So they send a purchase requisition to a purchasing agent or purchasing clerk who's handling the purchasing process in the organization. So purchasing agent, based on that requisition, send a request for quotes to the vendors, or even if the vendor is already identified for that particular product, they can send a purchase order to that for that particular material to be procured from that vendor. And then this for the cycle of product receipt and invoicing come to a picture. And once that product is received, it will go to the stores, and then from stores to production, the cycle will continue in that case related to your purchasing and consumption of the material. So that's how your purchase flow works in the organization or business world. So if you go to the next flow, which is related to sales, where there typically it will start from lead generation, then lead generation to quotation. So where we identify the lead for particular product sale, and then we send the quotation to that particular lead. Once organization or person accept that quotation, then we'll convert that quotation into a sales order. And once the sales order is delivered, we post the delivery note where we are sending the material to the particular party based on the sales order, and then process the invoice, sales invoicing, and then subsequently we receive the payment from the customer. So that's how typical sales flow works in a business world. So we'll as we discuss these flows in the purchase and the sales order, there are different aspects like your product, your customer, and vendors, which are a subledger or subledger for typical business scenarios. So how these subledgers are integrated to the ledger transactions, we'll discuss those in next 45 minutes. How these particular subledgers are configured, how these are integrated to the ledgers, and whenever we are processing those particular transactions, what financial transactions are getting posted, how we can configure different setup related to financials. So with that, I will move to the next point where I will share my screen with Excel sheet, where we'll discuss those particular setups in the dynamics, and then we'll also see the use cases related to it. So first set of things we wanted to discuss about a vendor or customer posting profile. So as a part of your ledger integration related to your purchase or sales process flow, where we are created using the customers or vendors, how these customers and vendors subledger are integrated to a ledger account or ledger in the Dynamics F&O world. So to integrate those subledgers to a ledger, we use this customer or vendor posting profiles. So I will go to the F&O and we'll discuss more in details related to this posting profile. So to set up this posting profile, customer posting profile, we need to go into this account receivable module. Under account receivable module, we'll go to setup and the customer posting profile. Over here, we can set up posting related to a particular customer or a group of customer or all customers, the same ledger account. So if I create a new posting profile over here, let's say a test one, and you wanted to add a ledger account to a particular customer or a group of customer, you can select this account code over here. So if you select a table, you can select individual customer wise. You can select over here an individual customer. Against that individual customer, which ledger account you wanted to configure while posting the financial transaction associated with this customer while doing your purchase or a sales transaction. Similar way, you can also define against the group of customers. So when you are selecting the account code as a group, you can select a group of customer. These are basically a logical grouping of your customers. So on the base, in this case, if you can see over here, there are different logical grouping identifier for the customer, like wholesale customer, major customer, or your intercompany customer. So based on those groupings, you can select those groups and then select the ledger accounts over here, which will be used while processing the transaction of purchase, sales, or payment entries against that particular customers which are associated with this particular group 10. So that's how the ledger integration between the sub ledger and ledger in respect to customer is defined in the Dynamics 365. The next aspect, I will delete this. The next aspect related to a ledger integration is product and a product posting. So we'll go to a module, product information management. So as we know in the Dynamics, there are concept of product. So you can define a product as an inventory or a non-inventory item, or for that matter, stock or non-stock item. At the same time, there is a concept in the Dynamics introduced in the AX 2012, and it is also available in this current version, where you can define product or a product master, and then you can release that product or product master for further transaction in the respective legal entities, or you can directly create that product in the release product itself. So I will, for the purpose of this session, I will create the product directly into a release product. So to create a product, you have to click on new button. Here we have different types of product available. One is item and another one is service. So service items basically use where we are not maintaining any stock or inventory against the item, and the item type items are used for the items where basically we are using inventory against a particular product. So that is the product type. And then there is the concept of product and subtype, that is product or product master. So product, when we are going to use the product when there is no any dimensions associated with this product, like a configuration, color, size, which we can attribute or associated with the product. And if you wanted to attribute some dimensions or associate some dimension with the product, then we need to use this product master as a product subtype whenever we are creating any new product. Then you can enter the product number over here, or it can be auto generated. So for timing, I'm just putting test over here. Then item number is also automatically getting copied. So important aspect related to financial integration for the product is applied in the item model group. So this item model group, I will just select one item model group as a FIFO over here, and then I go inside of this particular master. So this is the item model group. This is the one configuration which integrates this individual item with the ledger. So if you can see over here, here you can mention whether the particular item will be stocked or non-stocked in this item model group. What is the inventory model which will be utilized for the calculation of cost for that particular product. And this ledger integration is a very important aspect in terms of how you are going to deal with financial when you are processing any purchase or sales transaction against the product. So if you can see over here, this ledger integration, there are two options available. One is post financial inventory and another one is post physical inventory. If you can see over here, post physical inventory, it will come into a picture when you wanted to book a financial transaction at the time of product receipt, or whenever you are doing any delivery against a particular product. So if you wanted to post a financial transaction at the time of product receipt or delivery, you need to mark this particular checkbox as true. Then system will identify, based on this configuration, system post a financial transaction. The next checkbox is very much important in terms of how you wanted to define your product, whether you wanted to define your product whenever you book any financial transaction of purchase invoicing and sales invoicing, whether that particular invoicing will be booked as an inventory or you wanted to book that particular transaction when you are buying the product as a directly as an item consumption. So for example, if you mark this checkbox true, then whenever you are buying the material, the financial transaction will be booked as an inventory receipt and it will be posted to an inventory receipt account. If you don't mark this particular post financial inventory checkbox, it will, whenever you are buying that particular product, when you are post the purchase invoice, then system will post the amount of that purchase directly to your item consumption account. That is your profit and loss account. So that's how this particular checkbox is important in terms of your item model group configuration. So let's say if you mark this particular checkbox at the time of sales, the system will post the financial transaction to an inventory issue account, and at the same time it also book the item consumption at the time of sales order invoicing. That's why this particular checkbox is pretty much important, how you are defining your item for accounting in terms of your purchase invoicing and sales invoicing. So the next set of configurations are related to your storage dimension, your tracking dimension. Storage dimension where you are defining your site and warehouse where you're going to store that particular material, and the tracking dimensions, like whether you are going to track those material purchase and the entire journey of that particular product from purchase to sale, whether you are going to use the batch or serial number for tracking purpose from the end-to-end journey of that particular product. So here another aspects wanted to mention over here, standard prices of the product, whether the standard price of purchase, standard price of sales, or for that matter inventory. So this will come handy when if you define these configurations over here, if it will come handy when we are creating a purchase order or sales order against this product. So system will automatically pick these particular prices at the time of creation of your purchase order or sales order. So these are like a default setup which will come into handy when you are creating a purchase order or sales order against this particular product. So I will just close this. So we cover two aspects related to your ledger integration of sub-ledger of customers and products. We'll move to the next item, which is related to very important aspects related to your purchase or sales process, terms of payment. So terms of payment is a configuration which is used to calculate the due date against any invoice you are processing. So whether it's a purchase invoice or a sales invoice. So due date of that invoice will be driven by the terms of payment. And in the terms of payment, there is also a concept called payment day, which will come into a picture when some organizations has some policies like they do the payment of their vendors once or twice in a week. So how we're going to calculate that due date on the basis of this payment day, we will discuss that. So we'll move to dynamics and we'll see how this will come into a picture. So where we can define these terms of payment. So we'll go to this module, account receivable, payment, terms of payment. So here we have created two terms of payment for our session. One is with the payment day and another is a simple without payment day. So in a terms of payment, when we are creating any terms of payment, this payment method, whether it's a net, current month or current quarter, current year, current week, this come into a picture when to calculate your due date. So for example, if I selected net over here, so whenever I book the transaction of sales invoice or a purchase invoice on the 7th of May or the today's date, so it will start calculating your due date from the date of your invoice. So if I select net over here and mention the days over here as a 10, so whenever you are doing the invoicing on the 7th of May, system will start calculating a due date from today's date, and it will add plus 10 days and create that as a due date. So if today's date is 7 and we define the payment method as a net and we added over here as a days as 10, then system will calculate a due date as 17 for any sales order or purchase order where apply these terms of payment. If you select current method or a current quarter, so from end of that particular current month or a current week, system start calculating the due date. So if let's say if you select a current month over here, then if you apply this particular terms of payment to a transaction, system will start calculating a due date post this month, and then whatever days you have added over here, system will take that particular will add those days while calculating the due date. So for example, if I select this particular payment term over here and selected as a current month plus 10 days, then system will start a calculation of due date from the end of the month, and it will calculate a 10 June as a due date for that particular sales invoice or a purchase invoice. So that's how this payment method and days comes to a picture. Next important thing is like the payment day. So if you can go to this payment day, it is available over here in this accounts receivable module, payment setup, payment days. Here we can define how your payment day should be calculated. So it's calculated weekly and which day of your week. So you can mention that, okay, you wanted to calculate your due date as per the Monday or Tuesday or Wednesday. So if you take earlier example of terms of payments, if I go to the terms of payment and take this example of net 15, so system will calculate. So let's say if I selected a method of payment as a net and days as a 15 and a payment day as a Wednesday. So whenever we are calculating a due date for any financial transaction or invoice, system will add the days over here from today's date, and it will also check the payment day. So in this case, if I selected a payment as a Wednesday, so irrespective of whatever day this system is calculated after adding these 15 days, system will take in consideration of days, which is mentioned in the payment day, and will calculate the day due date accordingly. So we'll check how these particular things works in a transaction. So for the simplicity of this particular transaction, we'll go into account receivable and we'll create a free text invoice. So we can easily and quickly check how the due date is getting calculated over here. So, and we'll create a free text invoice to check how the system is calculating the due date. So I will create a new free text invoice over here. I have already created one customer, which is a priority customer. For this priority customer, I have already set up a terms of payment, which is net 15 plus 15 days. So if you can see over here, so if I go to this particular use case, when we are saying like calculation of due date with a payment day. So over here, we already configure the payment method as a net 15 days and a payment as a Wednesday. So ideally, as per the current 7 date, the due date should be at 25th of May. So if I go over here, when I selected this particular customer with the terms of payment as a net 15, the invoice date is the 7th of May. So system has calculated 25th of May as a due date. Why? Because if I open the calendar and add the days, 15 days over after post 7, so it will come to a so 22nd of your the 22nd May of when we add 15 days to a calculation of a due date. But as we set up a payment day as a Wednesday, that's why system is taking 25th as a due date. So if we change this particular invoice date to a further or before that, so system will automatically change those days as well. So if I let's say if I change it to 11th of May, it will automatically calculate that due date according to the terms which are mentioned, as well as take into a consideration of payment day, which is associated with the terms of payment. Now we'll see another example. So if I go to this but use case 2, where we are saying calculation of due date without a payment day, where we are just only selected a net and a days as a payment, and where we have not mentioned the payment day, and we keep the payment day as a blank. So I will create another free text invoice where we'll select a customer where we have defined the terms of payment as a net 15, which is and the payment is blank. So if you can see the change over here, so we are the invoice date we kept as a 7th of May, and here you can see the due date is calculated as a 22nd of May. Why? Because we have not provided the payment day in the terms of payment. So that's why system has calculated this due date as a 22nd of May. Okay, so that's how the terms of payment and payment day come into a picture while calculation of due date. So we'll move to the next point then as part of our agenda. The sales price, trade agreement related to sales price, and a total discount. So as a part of your business, as a part of business, the organization generally configure the standard sales and sales prices and the discount against the products. So if new person joins in the organization, he or she don't need to go to a lot of training and other aspects. So as a part of standard practice, organization set up this standard sales prices or a purchase price or a discount against the individual products. So how you are going to set up, where you are going to set up those particular standard prices and discounts. So to do that, we need to go to directly to a particular product. So I will go to the product information. I already created few trade agreements. So we'll select a product which is already configured. Let me filter. There are two products which we have configured where we defined trade agreement of a total discount and a sales price. So first of all, I will go into this particular item RM001, where we have defined only a total discount as a part of trade agreement. So to view this particular trade agreement, you can go into this view trade agreement, where as a part of a total discount trade agreement, you can see over here as a relationship, a total discount for the group of customers. So for the higher volume customer, we wanted to provide that discount. So you can select group of customer or a individual customer, or for all customer, you can define this total discount. And then as a part of this next configuration, which is related to your product, you can, in case of total discount, there is no option to select item wise or a group wise selection as a relationship. So over here, you can select a system automatically select all as a part of your configuration. And then here as a you can mention as a site or warehouse wise those details. And as a part of total discount, either you can define a discount in terms of currency or money, or in terms of percentage. So for this example, we have created the total discount in terms of amount. So here in the amount in transaction currency, I have mentioned 10 US dollar as a part as a total discount. Okay. For the sales, so for the sales trade agreement, I'll just go to the another item and we'll see. So for the particular price sales. For the sales trade agreement, we have selected is a relation as a price sales. Here we can also define the party code type as a group, and for major accounts for this particular product, whenever we are selling this particular product, we have defined the sales price as a 90. And for this second set of group of product as a wholesale account, we have set up for this particular item the sales price as a 100. You can also see the total discount which is applied for all the products is also appearing over here as a part of your total discount. So you can see the total discount of $10 is appearing over here. So I will create one example. So we can just more discuss about how to create a trade agreement. So I will just create one trade agreement. Over here, you can just create a new journal. There are different setup any trade agreement for the sales or a total discount. We have to route it through a journal and a journal, so trade agreement journal. So here I'm just selecting a trade agreement journal, which is for the sales price, and we'll go to the lines. You can see the relationship is automatically set, which is because this particular relationship is associated with your journal name. So that relationship is automatically picked over here as a price. In the relationship, you can see there are different set of relationship are available. So purchase price, which is whenever you wanted to set up a purchase price, a standard purchase price against the product, you can set up a line discount against the particular purchase. You can select a multi-line discount or total discount for the purchase. Similar way, you can define a sales price for the products, line discount, multi-line discount, and a total discount against a product or a product at the time of sales. Here, you can select a table. So you can define this purchase or a sales price as per customer, or you can set up as per a group. Don't get confused with this particular group with your customer group. These are a different price and discount group which will be associated with your customer account. So the customer group which are used as a logical grouping of customer, and that will be used as a part of your posting profile during your ledger integration. Those are different than this particular price and discount group. These are specific groups which will be associated with the customer to derive the sales price or a discount at the time of your sales or sales process. Okay. Then as a part of sales price, it is system is always allow a table as a relationship should be selected over here. Why? Because you cannot set up sales price for all the product as the same sales price. So that's why by design in the system, you can always select table over here. So system will not allow you to select a group or all when you are defining a sales price again in the trade agreement. So as we discussed earlier, there are product and product master configuration. So if you are defining a sales price where the product is configured as a product master, so in that case you can select the sales price as per the configuration, size, colors, or style which is associated with that particular product. So based on that product master configuration, you can select this different product dimensions, and accordingly you can set the price. At the same time, you can also define the prices, sales price or a purchase price as per your site or warehouse. So there might be a case like for the city location, your sales price will be less compared to a remote location. So based on this site and warehouse selection, system automatically picks the sales or a purchase price when we are processing any purchase or when we are creating a purchase order or a sales order. So, and here you can just go and define in case of from and to unit, you can define, okay, for certain, let's say if customer is buying 100 quantity, so you will charge a $50 for that 100 quantities. But if he's buying more than 100 quantity, you might wanted to give some discount, or you wanted to give some less price in that case. So you can define those kind of a prices over here by defining over, okay, here as if someone buys 1 to 100 quantity, you will charge them £50 or $50. But in case if they go beyond this 100 quantities, then you have to create a new row over here and then add those quantities details over here, and then accordingly you set up a price, reduce price over here. So that way you can configure this trade agreement for the sales prices. So this is related to your trade agreement for sales price and the total discount. We'll also discuss next about the charge code, and then we'll move to the use cases. So charge code is very important aspect in terms of your business transactions related to your purchase and sales process. So charge code is like, let's say if you're delivering any material to a customer, in that case you're charging some amount as a part of your delivery. So maybe your transportation cost or your insurance cost for that particular sales. So how you're going to apply the charges on that sales order, or for that matter if vendor is applying those charges to us as a part of your purchase process. So how we're going to define that particular charge codes and how those are integrated with the ledger or financials. So we will discuss those now. And then there is a feature available in the dynamics where these charges are automatically applied on your sales or purchase transactions based on that configuration. So let's say there is a customer, there is a process like whenever we are delivering any material to a customer, we are applying a fixed charge of transportation of $5 or $10. Then every time you don't wanted to someone to go and apply that charges on the sales order or for that matter purchase order. So what you are going to do, you will define configure this auto charges. So we'll discuss those points over here. So first we'll discuss about the charge code and the ledger integration of those charge code. And then we'll see how the auto charges setup will be done for the sales order in case of sales order. So first we'll see the charge codes configuration. So to do that, we'll go to this account receivable. In the account receivable, we have this separate section charge setup. So in that charge setup, we have these charge codes. So here we can define those charge codes. So let me create a one charge code like transport. Here, this charge code where we are defining this, what is the, whenever we are posting this particular charge code or applying this charge code on the sales or a purchase order, how the accounting entries will be posted for this particular charge code. So here you can define whether you wanted to select a debit to item, ledger or customer, or and credited to a same item, ledger or customer. So I will show you one table which will help you to understand while doing the sales order or a purchase order how you can define this charge code. So let's say, for example, if you wanted to bill that transportation cost or insurance cost to a customer, how you're going to define this charge code. So as a part of your debit entry, you have to select a customer or a vendor in the charge code master. And in the credit, you have to select a ledger account. So what system will do, whenever your sales invoice is processed, it will add that charge code to a customer account. So it will debit that cost to a customer account and it will credit the cost to a particular ledger account which is selected at the time of charge in the charge code. In the another scenario, you are not transferring your transport cost to a customer, you are bearing that particular cost. In that scenario, you need, that is something which is you are internally billing that. So in that case, as a part of configuration, you need to select a charge code as a in the debit as a ledger account and the credit as a ledger account. So if you go to this purchase section, then it will create a different kind of it will open up a new dimensions to how you're going to set up a charge code. So for example, vendor is adding that charges of transportation or what charges related to a purchase. Then in the credit section, you have to select a customer vendor. So whenever you perform the purchase invoice, it will book that cost against the vendor. And then how you wanted to apply that cost, whether you wanted to book to add that cost to your item which is purchased in that particular purchase order, whether you wanted to add that cost to that item, then you have to select in the debit section in the debit posting as an item. If you don't wanted to add that cost to an item, then in that scenario, you have to select the ledger account as a debit type, as a debit posting type. Let's say if the vendor is not charging you as a part of purchase process and everything will be paid internally and you wanted to apply that cost to the item, in that case, as a credit section, you have to select a ledger account as a posting type and you wanted to apply that cost to the item, in that case, as a posting type in the debit section, you have to select the item. Okay. If you don't wanted to apply the cost to an item and you are not paying to the vendor, in that case, as a debit and credit posting type, you should select a ledger accounts. Okay, so that's how this configuration will come into picture for a different scenarios when it comes to a charge code. The next section I will just wanted to discuss like how we're going to set up a configure auto charges. So we'll go to this account receivable model under account receivable charges setup auto charges. Over here, there are two set of sections available, a header and a line. So whenever we are in this particular scenario, we wanted to apply to a line level. So we'll select a line section. So what it does, what is the header and line? So whenever you are creating any record as a part of your header section, it will apply charge code on the sales order or purchase order header. And whenever you are selecting a line level auto charge codes, so it is applying those charge code in the sales line, sales order lines. So whenever you are selecting the item, it will get automatically applied on the sales order or purchase order line. So for this, for our session, I have configured three set of auto charges. One, which is for all customers. So I will just explain how this auto charges work. So here you can define a table level relationship with the auto charges. Like when you select a table, you can able to select a customer if it is group. Again, this is whenever you are selecting as a group, these are not related to your customer group. These are a separate charge group which is associated with the customer. So based on that charge group selection or association with the customer, system will apply these auto charges. So and then you can also select all. So whatever auto charges you are creating, it will apply to all the customer. Similarly, when there is an option to select item, group and all. So whenever you're selecting item, in the item relation, you can see the all the product details are appear. You can select the item, and whenever you are selecting or creating a sales order against that item, system will apply that auto charges on the sales order or purchase order. And the group, whenever you are selecting a group, you can select that item charge group. These are different than your item group. So these are special group after item charge group, which you can apply or associate this on the item level. Okay, or you can also apply this charge code to all items. So that's the way you can define this. And once you save this in the line level section, you can select the charge code which you have defined in the charge code master. So you can select that charge code, and here in the category you can either fix, you can select this fix, piece or percentage. So based on this selection, system apply the charge code. So whenever select the fixed value will be applied. When you are select the pieces, so as per the unit, a number of units you are selling or buying, on the basis of that those charge codes will be applied. And if you select a percentage, the line amount of the sales order will take into a consideration and will apply that percentage over here. There is a very important aspect in terms of when you are processing a partial sales order or something like that. This keep checkbox will come into picture. So whenever you are doing a partial sales order invoicing, if you mark this keep option, so system will not remove this charge code post partial invoicing of that sales order. So we'll see how this keep checkbox will come into picture while processing the transaction. So this is all about the configuration related to your sales charge code and auto charge code. Now we'll move to the use case where we'll create sales order and where we have applied auto charges, as well as we have configured a trade agreement for the sales price or total discount. So to do that, we'll go into a account receivable model. We'll create a new sales order. So I will create a sales order. Customers. Okay, so here we'll select the material one. You can see over here, this 80 as a unit price is automatically picked. So that is picked. So that is picked from a master configuration where we have defined this master configuration in the item master. So if I go to a item master, I will open a product information, release product. For this particular product, if you can see the trade agreement, we have not defined any sales price, only a total discount is applied. So how this sales price came or updated in the sales order? So you can see over here in the sales tab, fast tab of this particular product, we have defined this sales price, a standard sales price. That's why this particular sales price is automatically picked over here as a 80 as a unit price. So I'm just selecting this warehouse. Now we can see if you wanted to see the charges which are applied automatically on the sales order based on the automatic auto charges setup. So you can go into this financial tab and click on this maintain charges. Here you can see the charge codes which are created will be over here. So we have created one charge code as a auto charge code as a $10 on all the sales order. So that is appeared over here. Similarly, if I added on another item over here, RM002. So we can see the sales price is updated as 90. If I go to this particular item, here we are not defined any sales price, but this price is picked from your standard sales price. Over here, there are two set of prices which are defined. One is 90 and one is 100. So it is also for the major accounts, we have defined the sales price as 90, and for the wholesale accounts, we have defined the sales price as 100. So this particular customer is tagged to a major customer. That's why system has automatically calculated as a 90 as a sales price. So you can also see that tagging of the customer to a particular price group over here. So if I go to this header section of the sales order in the discount or charges, the price group, you can see this major account is automatically populated over here based on the configuration which we did or the association which we did for this price group with the customer. So that's why you can see over here that unit price is appear over here and the charge could appear over here. So now the next thing is like to do the invoicing of this particular sales order. So to do that, what first of all we need to confirm this sales order. As a part of process, we have to confirm this sales order. So we'll confirm this sales order. And then now we wanted to deliver this particular products to a customer. So to do that, we'll go to this pick and pack. Then we'll go to generate post packing slip. We'll select all as a quantity. Over here, you can see those line level details will be appearing over here. Then we'll just click OK. OK. So what it will does, system will post the delivery against this particular product, post the delivery. So you can see the status of this particular sales order is changed to delivered. And at the same time, as we speak, as a part of item model group, we have configured this for this particular product as a FIFO, and for FIFO we configure the ledger integration as for the post financial inventory marked as a true. That's why at the time of delivery, system has posted the financial transaction. So we can see over here those the financial transactions are posted in the as a part of your delivery. So you can see those cost of goods sold and the cost of unit delivered are posted. You can see the price are appearing as a 40, but as a sales price we have provided 80 and 90 pounds for this particular sales unit price. So how this 40 come to a picture? So this particular price which will become as a part of your cost price of that particular item. So whenever we are buying the product, the cost of that cost of purchase will be used to post the cost of goods sold in case of your sales order invoicing or a sales order delivery. So this cost is coming, this $40 are from the item cost. Okay, so here you can see those cost of goods sold and cost of unit delivered are posted. So this particular transactions are mapped in the, I will open for the example for the explanation of this, how this particular ledger accounts are appeared over here. So we'll go to this inventory management module. Under inventory management module, we have this posting. Under posting, we have defined this sales ledger accounts. These are here we can define those ledger accounts which are associated with the item or item group, or for all items you can define those particular ledger accounts. So this will be used while posting the transaction. So in our scenario, this 50150, which is cost of goods sold deliver and cost of unit deliver are posted. So that are picked from this particular configuration where cost of units delivered and a cost of goods sold delivered. In this radio buttons, we have configured those. So for all the materials, this 500150 is configured. So that's why if you can see this 500150 ledger account is used and posted as a part of your delivery. Same way 140200 is used because that is configured over here as a 14020, and this particular product is associated with this audio as a group item group. So particular ledger account is used posted at the time of your delivery. Now to perform to do the invoicing of this deliver material, we need to go to this invoice, generate invoice, packing slip. Here you can, we will select the quantity as a packing slip. So whatever material which we have delivered will appear in the sales line, and then we can click OK. So now we'll check the financial transactions which are posted as a part of your invoicing. So you can see over here the status of this particular sales order is changed to invoice. So we'll go to this journal invoice, the voucher. We can see the financial transactions posted as a part of your invoicing. I will go to this particular use case. This particular Excel sheet will give a better picture in terms of how you can read the financial transaction. So whenever we booked a delivery note, the cost of goods sold and a cost of unit are posted. Then at the time of invoicing, those particular ledger accounts will be reversed at the time of invoicing, and system will post the financial transaction which is related to your discount which is applied on the plan, the charges which is applied on the plan, and the customer account which will be debited in this case, and the sales order revenue. So if I go to this particular in the dynamics voucher transaction, you can see the cost of goods sold delivered are reversed and cost of unit delivered are reversed. And you can see the sales order revenue is booked as 170 because 80 plus 90 is 170 for those two prices. So sales order revenue is booked as 170. You can see the cost of goods sold means the item consumption entry against that item is booked as a 40 pounds, and a cost of unit invoice. This is nothing but your inventory account, which is your balance sheet account, is getting reduced because you are selling that particular products. So that's why this account is getting credited with a 40 pounds. The discount which is applied on the invoice, as we see that we have applied the total discount on the sales order invoice. That's why this particular account is booked as a cost to the company because we applied the discount on this sales order. So those 10 US dollars are posted as a debit account, and you can see the customer balance is posted as a 176. So here, if you can see, the 170 pounds is your total revenue, where we applied a $10 discount to the customer. So 170 minus 10, so it remains 160 pounds. But we also applied a freight charges like your transportation, a 16 pounds. That's why it added to 176. So we're going to collect 176 pounds from the customer, 16 pound as a freight, the 40 pounds, $40 as a part of your as a part of your inventory, and 170 US dollar as a part of your revenue. So that's how system booked, and all these particular configurations will up will be set up over here. This cost of invoice, where we will define individual item wise or group wise which account is to be posted. In the cost of goods sold invoice, you can define the same way in terms of your item group or against individual item what accounts need to be posted. And the similar way you will define the revenue account in this radio button. And for the customers and the charge cost ledger accounts, we already discussed. Those are appearing from a customer posting profile and a charge code setup. So that's how these ledger accounts will be used from the different posting profiles and get posted at the time of your plans. So let's say now we'll come to another use case where we are doing the partial sales order. So let's say you have customer is buying 10 plants, 10 quantity, and you are delivering only 2 out of those 10. And we also see how this charge code, automated charge code or charge code option of keep which we discussed earlier will come into a picture. So for that purpose, I will create another sales order against the customer. So before that, we'll change configuration over here. Let's say this charge code will, I have moved this, remove this skip option over here. And then we'll see, we'll create another sales order. We'll select RM. Let's say it's 10 quantities. Select one. We have created this sales order against this particular against this customer, and then we'll just confirm this sales order. And now we wanted to deliver only 2 quantities out of which. Here we can see in the maintain charges $10 are appeared, and the option of keep is no here. So now to partially deliver this particular sales order, we need to mention, okay, we are now delivering only 2 quantities. So we have to select 2 as a in the delivery now against this particular sales order line. And then we'll go to this pick post packing slip. We'll select a quantity as delivered now. And you can see over here, only 2 quantities are appearing. So we'll click OK. So we can see the similar kind of vouchers are posted over here for this particular, for the product delivery. Now we'll do the invoicing against this particular sales order. You can see the status of the sales order is not changed to deliver because we are not 100% deliver all those items. So only partially delivered. That's why the status of the sales order is remain as open order. Now we'll do the invoicing. We'll invoice. We'll select the packing slip as a quantity. So based on that, 2 updated over here, 2 quantities, and we'll click OK. OK. So now system is doing the invoicing. So if I go to this invoice section, you can see the vouchers as per the whatever we have invoiced, and those set of transaction will getting posted as we discussed at the time of earlier scenario. Now here we wanted to see what happened to that charge code which is applied automatically on the sales order. So if I go to this financial maintain charges, that will disappear from here. Why? Because we have not marked that keep checkbox. So if that keep checkbox is marked over there, then that will remain as it is over here. And whenever, as and when you are doing the invoicing, that charge code will apply on that sales order invoice. So that's why this particular keep checkbox is a key while doing the partial invoicing of sales orders. Okay. So that is related to your sales order invoicing. I will do another how to process a credit note against any sales order. So we'll see that particular transaction as well. So to do that, we'll go into a sales order. We'll open earlier created a sales order. We'll select this particular sales order which we booked invoice earlier with 1 quantity. To create a credit note against this particular sales order, we have to go over here, the sales, create credit note. Then we have to select invoice which is booked. So this is the invoice which we have booked, the 731 as a part of earlier scenario, and we wanted to post the credit note against this particular invoice because of some reason you wanted to customer has returned that material, and then you wanted to book the credit note against that invoice. So we'll mark that particular invoice. Automatically system mark those lines as well, and once we create OK, system will create a negative line entries against those items over here, and you can see the status of the sales order is changed to open order. You can see all those details are appearing over here automatically. Now to process the packing slip, when we are receiving the material back from the customer, we'll go pick and pack. We'll post the packing slip. Select all over here. So you can see the negative quantities are appearing. So we'll click OK. So if you can go to pick and this packing slip, reversal of packing slip, you can see the vouchers here. The earlier deliver the material, this cost of goods sold were debited, but now we are posting the credit note that therefore these accounts are reversed. So cost of goods sold is now credited and your cost delivered, the cost of unit delivered is debited over here. So it just reverse whatever transaction booked at the time of your delivery. It just reverse for the credit note. So now we'll go and do the invoicing against this particular sales credit note. So we'll go to invoice, generate invoice. We'll select packing slip. Here you can see the negative lines are selected over here and we'll click OK. So now invoice has been completed against this credit note. So you can check the status has changed to invoice. If I go to invoice and wanted to check the vouchers against this particular credit note. So we'll select this credit note and go to the voucher. Here you can see all those transactions which are booked at the time of invoicing are reversed. So your customer account is reversed, is now credited. The inventory account is debited because your material is coming back to you. So that's why you are adding that amount to your inventory account. The discount which is applied, it is getting reversed and your revenue is also getting reversed over here. So all the transactions which are booked at the time of invoicing will be automatically will be reversed, all those transactions in case of your credit. So that is about a sales process related to invoicing, partial invoicing and a credit note. Now we'll 5 minutes how to process purchase order, a partial purchase order and a credit note against the purchase order. So as we already discussed about the trade agreements and the purchase, the prices and other aspects. So we'll and do the purchase order invoicing. We'll process the purchase order invoicing and we'll see how those transactions are processed or how these transactions are look like and where the ledger integration happen against those financial transactions. So to do that, we'll create a new purchase order. So we'll go to accounts payable module, purchase order, all purchase orders. We'll create a new record, select material sub vendor. We'll click OK. Here we'll select item where we already defined a purchase price against the item. So here this unit price is already automatically appear. So we'll take for this example, we'll take this quantity as a 1. So those sites and warehouse are automatically picked from the configuration itself. Wanted to send a purchase order to the customer. So we first need to confirm this purchase order. And once it is confirmed, we'll send this purchase order to a vendor. And then once we receive the material from the vendor, we'll book the pack, we'll process the product receipt against this purchase order. To do that, we'll go to this receipt, product receipt. Over here, we'll select order quantity. So we ordered one quantity will appear over here as a part of product receipt. So this is the vendor number which is provided by the supplier will need to be updated over here. So I will just mention as 0701 and we'll click OK. So now the material has been received. So you can see the purchase order status is changed to received. If I go to received and product receipt, here we can see the vouchers. So now the vouchers are not appearing. Why? Because as a part of dynamics, the entries which are posted as a part of subledger will not directly appearing in the vouchers. So we need to run one batch which will move your subledger transaction to your ledger account. So to do that, we'll go to this general ledger, periodic, subledger general entries not a transfer. So here you can see that record is appearing over here. To transfer this to process that, we need to just click on this transfer now, or you can process this via daily batch. So it will post those transactions to your subledger. So now if you go to this product receipt again and see the vouchers, you can see the voucher is posted against this purchase order. So those 755 pounds are 55 pounds are posted as a part of your product receipt. This is again based on your item model group setup, which is defined where we have marked the post financial inventory as a part of your item model group setup. And we wanted to post a financial transaction at the time of your product receipt. So that's why system has posted this particular transaction. And from where you can see how these accounts are getting updated over here. To do that, we'll go to this item postings, the similar kind of a configuration, but in a different tab. So if I go to this inventory management, setup, posting. So in this purchase order, we can see the cost of material purchased, received, and purchase accruals we are configuring over here. So if I check the vouchers over here, 180295 and 14230, which is ledger account, which is posted as a part of cost of material received or purchase accrual, are set up over here as a part of purchase accruals 180295, and a cost of purchase material received is 14230 are appearing over here. So that's how your ledger integration happened for the item in terms of whenever you are processing a purchase order in product receipt. So now to process a invoice against this purchase order, what we're going to do, we'll go invoice and generate invoice. Here, configure the matching principle. There are three-way matching or matching for the invoice. So that's why you cannot see all those other aspects. So it's just a pure invoice posting without any matching principle. So I will just update invoice record over here. So that is the invoice number which is received from the vendor. And then you can see over here those line details appearing as a 55 pounds. You can mention the invoice date, whatever invoice date provided by the vendor. So we can just select that invoice date. As per the invoice date selection, you can see the due date is calculated based on the payment term which is associated on this purchase order. Now to book the invoice, we need to click on this post button. So now the invoice has been posted. You can see that the status of this purchase order changed to invoice. To see the accounting entries related to invoice, so we need to go to invoice. Over here, you cannot see these vouchers. So again, we have to run this batch or transfer this transaction to a ledger account. Then we'll go to the voucher. So over here, you can see the ledger account, the vendor account is credited. Your purchase accruals, which are booked at the time of your product receipt, are reversed over here. And your inventory account, which is your asset account or balance sheet account, is debited because you added that cost or added that asset to your books. So that's why those inventory account is debited over here. And this is subsequent entry, like you need to pay that money to vendor. That's why the vendor credited over here, because that's become your liability. So that's why it's getting credited over here. So this particular ledger accounts which are configured over here, how these are integrated. So accounts payable, this vendor account is picked from your posting profile, and this cost of purchase material invoice, that is inventory account, is getting picked from your posting setup. So if you can go over here, this ledger account is picked from here, the 140210. So you can see 140210. So that's how that is completed your invoicing part of it. We'll just take 1 minute more how to process a credit note, one or credit note against the purchase order. So there are, let's say if you wanted to send this material back to the vendor. So there are a couple of ways available in the dynamics to process a credit note. Either you can create return material note, return order actually, or you can create credit note. So for this purpose of session, we'll create a different purchase order against this particular vendor. Here we have this option, like whether you wanted to book via return order. So for this session, we'll just create a new purchase order. And from this purchase order, we can create a credit note. So once we go to this credit note, we can see all those transactions which are booked, invoice booked against this vendor. So we can just select this particular credit note invoice, which is already booked against the supplier. And then we can just click OK. It will copy those transactions over here in the purchase order with a negative line. So you can see over here, this item is copied with the item, the unit price, which is mentioned at the time of invoicing. Now we wanted to book credit note when we wanted to send this material out. So first of all, we have to just confirm this purchase order. Then we have to post the product receipt for this quantity. So it's 10. We have to mention the reversal of this PR0701. We'll click OK. So now system is processing a return of this particular. So you can see the status is changed to receive. If we can go to this product receipt, we'll just again need to rerun this. Then we can go and check the vouchers. Now here your purchase accrual account is debited and your cost of material received account is credited over it. So it's just a reversal of whatever transactions which we saw at the time of a product receipt are getting reversed. At the same time, now we wanted to invoice that credit note. So we'll go to invoice. Here we'll select a product receipt as a default. Here you can see the credit note and you are just reversing this transaction. So just selecting, just mention the invoice ID, date over here, and then we'll click post to process a credit note invoice. So once the credit note is processed, the status of this purchase order is changed to invoice. And if you can go to invoice journal, again we have to run this because then we can go to voucher. You can see over here. Now your vendor account is debited because now we are removing that liability from the vendor account. Your earlier account, which are booked at the time of product receipt, are reversed over here. All those purchase accruals and others. And this your inventory account is also credited because now you are moving out that particular inventory from your books of account. So that's why that account is getting credited over here. So that's how you process your purchase invoicing and your credit note. I hope I covered all those scenarios over here. Yeah, Rakesh, I covered all those scenarios. So,
Okay. So I think let's quickly check the questions. I can see there were a couple of questions asked by Maharaja and other folks like Arvind, and we could able to address a couple of them. That is Anil and Bharata's address. There is a one question from Maharaja. I think I will enable the mic for Maharaja so that he can ask the proper question. Yeah, Maharaja, go ahead.
Hi all. First, congratulations, wonderful job by all. Kudos to the team. So the question is about how is COGS calculated? When we do a delivery. So can you throw some light on that?
yeah. So COGS is calculated on the basis of your cost price. So let's say if you buy a material, we'll just take a simple example. You buy a particular product, one quantity of 100 pounds. Okay. So that 100 pounds become a cost price for the material purchase. So whenever you are selling that particular item at, let's say, 150 pounds, but as a cost price, which is booked at the time of purchase, is 100 pounds. So once you sold that particular item, system will post COGS as a 100 pounds only. And you, in your revenue account, system will book 150 pounds. So ideally, in nutshell, you'll have the margin of or profit of 50 pound in this case.
So can I assume COGS is nothing but your cost price?
It's a cost of consumption of your item. It's a cost of consumption. So whatever cost you booked at the time of purchase of that material needs to be booked at the time of your sales. So let's say you purchase a material at a 40 pounds and you are selling that at a 80 pounds or 100 pounds. So the COGS will book as a 40 pounds whenever we are selling that, processing that sales order.
Thanks, Rupesh.
Okay, I think with that we'll take a pause. If there are no further questions, we'll give few seconds more. If anyone has any questions with respect to today's session. If you want to ask a question, maybe I can unmute all the attendees. Let me just quickly do that. Okay, there you go. You can unmute yourself and ask a question if you have any specific question, folks. Okay, I think I'll take it as a no. So awesome. It was really a good session, Rupesh. And thanks that you covered all the aspects that we planned for today's session. And once again, thank you very much for your time and shared your knowledge with all of us. I think with that, we'll take a pause today. And once again, I would like to thank everyone who joined today and appreciate your time. Stay tuned for our next session. I think I already pasted the agenda for next session. That will be more on the technical artifacts related to finance and the aspect that we talked about right from session 1, session 2, and today's sessions, where Shabir is going to help us to understand each and every aspect. For example, your payments, your set of tables, your relationships, and if at all, if there is a need to extend those artifacts, what are the classes, data entities, if at all, if you want to export the data, import the data, how the products offers. So we'll try to cover all the aspects right from the extension of the products or the capability that product allows, as well as the integration aspects. Again, the boundary will be defined with the session and the series that we plan for the FNO finance specific. But if you have any specific questions beyond that, happy to help in that session as well. Okay, so with that, I think we'll take a pause today. Thank you very much. Thanks, everyone.
Thank you, everyone.